Bitcoin is hope. Okay? So let me say it a different way. If your family has $100,000 and you showed up, today, and I told you it was in a bank in Lebanon and now it's 20,000, but you can't spend it and it's going to zero, what's your family's morale?
So it's not necessarily, oh, have people disagreed with you? Because right now, also, you look like a genius. You bought the thing, the brand is up, the stock is up. If you really disagree now, this is your own personal problem at this point. The strategy has clearly worked up till now. The question is more that, hey, we've had periods of time. I've been holding Bitcoin since 2013, 2014, and I've seen Bitcoin go down, 70, 80% drawdowns, and you have basically taken out a bunch of debt. What happens when Bitcoin price drops again? What's your reaction to that? How does that affect your strategy, or what's your overall viewpoint?
Well, we have permanent capital, so it doesn't make a difference to us, right? I can give you 1,000 reasons why I think it makes sense to invest in Bitcoin. I can't give you any reason why I should be afraid to do a rational thing.
Imagine waking up one day to find your family's life savings, $100,000, stuck in a failing bank overseas. It's now worth $20,000 and dropping fast. That's the kind of financial fragility Saylor warns about. For him, Bitcoin isn't just an investment, it's a financial solution to a global problem. As the executive chairman of strategy, Saylor transformed his company's treasury strategy by putting billions into Bitcoin. Why? Because the macroeconomic environment is stacked against people without assets. Inflation eats away your savings, fiat currencies devalue over time, and traditional bonds now guarantee a loss with negative real yields. In Saylor's words, you're going to work exponentially harder for a currency growing exponentially weaker. But Bitcoin changes the game. It's a scarce, decentralized, incorruptible asset, a digital vault no government can inflate, confiscate, or debase. And to Saylor, volatility is the price of long-term freedom. He says there's no reason to be afraid of volatility when you have permanent capital and conviction. For long-term holders, this is the opportunity of a generation. As institutions are just beginning to move in, Tesla, BlackRock, and others have made their play. But retail investors still have the chance to front-run the big money. Bitcoin's price currently sits just over $85,700, up over 12% just this week. With tariffs, inflation, and market volatility, Saylor says Bitcoin is about to change the game in 2025.
So it's not necessarily, oh, have people disagreed with you? Because right now, also, you look like a genius. You bought the thing, the brand is up, the stock is up. If you really disagree now, this is your own personal problem at this point. The strategy has clearly worked up till now. The question is more that, hey, we've had periods of time. I've been holding Bitcoin since 2013, 2014, and I've seen Bitcoin go down, 70, 80% drawdowns, and you have basically taken out a bunch of debt. The majority of the company's value is the Bitcoin the assets that it owns. And if we do see, I think we kind of agree volatility will dampen over time, but that doesn't mean we can't see a drawdown like that again. What happens when Bitcoin price drops again? What's your reaction to that? How does that affect your strategy, or what's your overall viewpoint?
I can't see any downside for the employees. They've all benefited. I can't see any downside for the investors that stayed with us. They've all benefited, right? I mean, there are critics out there that don't like Bitcoin. There are people that will say operating companies shouldn't have assets, right? There's criticism. People say, well, you're a CEO. You should go back to your cubicle and write software and leave the investing to the professionals. But I think that the fundamental elephant in the room here is that the macroeconomic environment is so incredibly unfair to people without assets. Like literally, if you're an operating company or a Main Street company, you have to work 30% harder to stand still. And if you're a Wall Street company, you can stand still and get 30% more. Like the playing field is so tilted in favor of property owners or asset holders against manufacturers and companies that do things that you can't really be successful in business unless you have assets as part of your strategy.
I want to know if we do see another Bitcoin, crash, draw down 50%, 60%, what happens to your position and what happens to your point of view?
Well, we have permanent capital, so it doesn't make a difference to us, right? If you cut Bitcoin in half, we would still have an investment gain. But otherwise, we've got a long-term strategy, which is you buy it and hold it. And I think that a lot of people live in fear of volatility, but a lot of people live in fear of a lot of things, right? If you have enough fear, you won't leave your house, you won't do anything. And so you have to have a bit of courage and conviction. I can give you 1,000 reasons why I think it makes sense to invest in Bitcoin. I can't give you any reason why I should be afraid to do a rational thing. If I had it to do all over again, would I? Of course I would. Right? Ask all the investors that made billions and billions of dollars, over the time frame. Right? Of course you would do it again.
I think for most people, a lot of what you were saying, I think, is going to be over their heads that listen to this. To be perfectly honest with you, I think, but I could distill it down into a simple way of looking at it for anybody that listened to this and they were intrigued, but they didn't know, they haven't, sort of gone down the rabbit hole yet, which is very simply, if guys like Michael Saylor, who own public companies that have a ton of money, are worried about what they're going to do because their money is melting, and they're looking for investment grade, sort of the most powerful treasury asset, and he's decided it's Bitcoin, and Square has put some money in, PayPal has put money in, Tesla's into Bitcoin. It's likely that there are more companies out there, and it'll take them 6 months to a year to make this move, but they will take a portion of their treasury reserves and they'll move it into Bitcoin. And these are long-term holders. These are not retail day traders that are going to be, buying and selling the thing like crazy.
I think it's a reasonable thing to say. I agree with it. Another big picture way to say it is there's $100 trillion of treasury assets that have a negative real yield of -10 to -15% a year. That means they're destroying $10 trillion a year of value. The solution is convert all of that money into Bitcoin.
Embracing an unyielding enthusiasm for the Bitcoin realm, Saylor and Lee confidently predict that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Lee and Saylor reassure that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
So the real simple thing is you can sort of invest into the network. You can buy Bitcoin yourself, and you can front run the institutions that are coming. That was a very simple thesis, a very simple takeaway for somebody who's listening to this. If you're a company, you better be thinking about what you're going to do with the cash. If you're an individual person, you should also be thinking about what you're going to do with your cash. And the easy move is that for once, you get to front run the institutions and you get to get in before they all get in.
Bitcoin's $1 trillion asset. People that understand Bitcoin think it's going to grow to become the $10 trillion asset that gold is. And then it's going to replace negative yielding sovereign debt and then corporate debt. And ultimately, it will become the primary treasury reserve network and treasury reserve asset. And so if you have a company, if you're an investor, it makes sense to buy it because it's got a brilliant future and it solves a problem that everybody on earth has. And if you're a company, it makes sense to plug your treasury into Bitcoin because the road to serfdom is working exponentially harder for a currency growing exponentially weaker. Right? You're just going to work yourself to death. Put yourself in a position of working as hard as you can in Venezuela or Argentina or Zimbabwe and roll the clock forward a decade and ask yourself the question, what do you wish you did? And the answer is protect your assets, protect your monetary energy, your treasury by putting it into a scarce asset in a bank in cyberspace where no one can steal it, debase it, or destroy it. And that's the Bitcoin ethos. We're simply trying to make it worthwhile to do the other stuff. There's no point in doing 100 million other things if at the end of the journey, you've got nothing to show for it.
In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies, as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. He suggests transitioning to a Bitcoin standard. As the world grapples with the impending crisis, he asserts that the promises made by the central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, this will not lead to a return to the status quo. What do you think about the latest interview with Michael Saylor? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?